Hi guys, I'm Praveen Khetan, and today's we will learn about Bitcoin. And great, it is being integrated in uh, risk management and investment management subject by GAP. And a lot of people are curious about the Bitcoin because people made a lot of money trading Bitcoin, and in fact they lost also. And this is one of the most popular cryptocurrency. So we'll understand everything about Bitcoin in today's class and how the Bitcoin, the blockchain technology works and how the Bitcoin is being traded and what are the limitations and a lot more things. So let's continue. What is blockchain? Blockchain was developed in 1991 for financial transactions, but it failed because of the internet connection reach and many other reasons. And then it was reinvented by Satoshi Nakamoto in 2008 to use in the cryptocurrency Bitcoin, and as it is a public transaction ledger, so every transaction is recorded on a public ledger. And luckily Satoshi Nakamoto, nobody knows who this guy is. This is again an anonymous guy. So if you see the size of Bitcoin records, so by 2014 the size was around 20 GB. So if you want to be a Bitcoin miner, you will have record of all the transactions since the inception of the Bitcoin, and the file size in 2014 was 20 GB, and now it is around 100 GB, so which has record of all the transactions on the blockchain for the Bitcoin. And the blockchain is a decentralized, distributed and public digital ledger that is used to record transaction across many computers so that any involved record cannot be altered and retroactively without the alteration of all subsequent records. Wow, heavy words, heavy definition. I have taken this from Wikipedia. Thanks to Wikipedia. Anyways, we'll understand this thing. So it says a blockchain is a decentralized and distributed and a public digital ledger. So let's move on here. So the Bitcoin works on a peer-to-peer network, or the blockchain works on a peer-to-peer network. So remember, if you have downloaded some files from torrent network, the torrents are also illegal right now. So the file is stored on everybody's computer. So even one computer is not working, you can still download the file from somebody else. So the copy of file is with all the peers in the network. So this is similar kind of a peer-to-peer network where all the data copy is kept on with all the nodes on the network, and all the nodes are basically computers, and these are most of the time Bitcoin miners also, so they validate the data. So this is a peer-to-peer network which does not have a centralized server. So all the computing power for Bitcoin is received through all these individual computers. So these guys are like miners and nodes. So Bitcoin is hard to manipulate. Why? Let's understand this thing by taking a simple example of properties documents chain. So normally what happens is when we are buying a property title, we normally check the record of all the past titles. Why? Because one title is connected to another title. So one property buyer checks that who was the previous buyer and the previous to that and previous to that, since the first issuance of the property from government to common person, common public. Now, so in this chain, normally if you want to alter any record, so let's say you go back 10 years before, and you don't time travel, but you look for the 10 years before record, and you manipulate with some data 10 years before in the government records, and you create a fake, purchase an old bond, for a government bond and create a title for yourself, and you alter the centralized record with government, you can claim the property. Now you can dispute the property. It's not easy to claim, but you can dispute the property. So if the centralized record are manipulated, things can go wrong because the copy of the record is only with the government. So that is a problem here. Now this problem is solved with the blockchain. Another thing is that every block is connected, and once you change one block or one record, the next block will not link to previous record. So how this thing works, let's understand. So basically blocks holds three things. One is the data, another thing is the hash of the block, and the hash of the previous block. So these three things are there on any block. So block is basically a kind of a file, like an encrypted file, which has three things: the data, the hash, and the previous hash. Okay, and this forms a chain, and it's hard actually to crack. Now, so normally how this works, let's suppose there are three blocks, and the first block is the genesis block. So it will not have a previous hash. The hash will be 0. So this is the first block created, and this will have its own block, its own hash, but not the previous hash, because before this there was no block. So it will have its own hash. So what is a hash? This is basically a fingerprint, kind of a fingerprint, to identify or authenticate the block. So there is a new block created. When the new block created, there are normally, let's say if we talk about Bitcoin transaction. So if there's a new Bitcoin created, it will have or Bitcoin transaction is being made through a blockchain. So this will have three figures normally: the amount, the two guys who is sending and who you want to send, and the guy who is sending. So normally three information, and it will have a global key, and there's a private key and a public key. So this global or the public key and the private key. So what happens is once the block is being created, okay, it is automatically sent for validations to the entire nodes. So one copy is sent to every nodes to validate it. So what these miners do is they try to figure out the history of this guy, so who is sending money to somebody new. So they check out that the guy has money in his account, okay, and the block is being linked to some past chain, okay, is not. So if it is being linked to some past chain and the history is available on the network, they validate the block, okay. And once they validate the block, okay, there is a cryptographic puzzle is basically sent to the miners, and they have to solve it using a public key. And once that is being validated and understood that the transaction is a legitimate transaction, a block is created in the blockchain technology. So next block will be having the hash of the previous block, okay, and same as new block is created, it will have its own hash and the previous block hash. Similarly, the next block will have the previous hash, this and its own hash. Now let's suppose a block was created a month ago. Somebody wants to alter the information. Let's say somebody wants to steal the coins, and they want to change the from data to data. So once you want to change the to data, here the hash will also change. So if you alter this block, any information, if you alter in this block, the hash will change. If the hash changes, it will not link to the next block. So anybody can easily identify this block has been manipulated, and somebody wants to manipulate it, he has to validate the block. And to validate the block, okay, trust me, at least 50% miners or the nodes should validate it if you want to alter it, okay, otherwise it cannot be altered. So it is impossible to alter a hack, a chain, a block in the chain. So how it works actually? So let's suppose one party requests for a transaction. The request is sent to the peer-to-peer network of the blockchain, and the each individual computer or nodes will verify this thing. So individual nodes receives the request and validate the transaction using an algorithm. So they validate it. Basically, there's a cryptographic puzzle. They solve it and they see the history of the block. It is linked or not. The guy has money in his account or not, because he got this is every transaction was on the public ledger. But yes, you don't know the name of the person, but just you have the public key and the private keys. And once they find this is legitimate, they approve the transaction as represented as blocks, and this block is added to the public ledger. So once the block is added, you cannot edit it anything, and this block is now permanent record in the blockchain, and which is connected with the previous block. The guy receives the money, the block is added to the chain, nobody can alter it. So that's why we call it a blockchain. Now, so it's really tough to alter. Now, how the bitcoins are being traded. Now, again, I told you Bitcoin is traded through this blockchain network. And how can we trade bitcoins? Now, trading bitcoins and mining bitcoins are two different things. To trade a bitcoin, it's very easy. I'll show you where you can get the data, and also I'll show you where you can find the open ledger for all the transactions, and how does a hash look like. So let's open a terminal. So let me open this terminal. Now we have a blockchain explorer here. You can see this is one of the best website, blockchain.com. So if you open the blockchain.com, you will have all the bitcoins transactions trades available here, all the historical data. That's an open ledger. So these there are blocks. Now typically a block takes on an average around 10 minutes to get created maximum, I have seen, and maybe less than that also. And who is the miner? This is the name of the miner. There's a Bitcoin Club network. We have BTC Top, Antpol, and there are many others. So these are miners. So you can get associated with any mining network. And if you have a very good computer, very fast, very high, processor, because it's a serious stuff, and you can get anything between $5 to $12. I don't know what is the rate now, but initially people used to get approximately $50 to validate a block in the blockchain. And you really want to see the transaction data. You can see the transaction. Now look at here. Every second the hash will be updated. So it is not updating. It will download the data. It will update. Or maybe if the market is closed today, I don't see. Okay, so I have to click on view more. Here it is. We have transaction per second. There are 88.62 transactions every second. Look at here. This is hard for me to get the information like this. Okay. Anyway, let's get back here, and you can get a free wallet here. So I just want to get back to the Explorer. We have the blockchain Explorer here, and we can see the blocks transaction here. Now this is the transaction hash. So this is the fees paid, fee per byte. So basically blockchain miners are receiving these fees. I want to visualize the tree. So this is the origin, and we have the BTC hash, and there's the hash. So I'm not too great into technology, but I know how we can trade into Bitcoin. So let's understand how do we trade in Bitcoins. So if you want to buy Bitcoins, this is the one of the most popular website in United States, that is Coinbase. So it's easy to buy on Coinbase. So how do we do it? You simply have to um, sign up. We cannot buy right now in India through Coinbase. We have another one that is called JapPay. You can download the Android app and you can trade it through JapPay, but they have little higher transaction amounts. So if you look at the fees, the deposit fees is not too big here. Deposits are free. As you see, we have India and global. So look at India. And JapPay is widely used. It's easy, but JapPay has high withdrawal fees. So you can see here, if you withdraw a Bitcoin Gold, it will ask you 0.01 BTG. That's very high. If current Bitcoin price is 9,000, you can get around 1% of that. So around 90 rupees they will be asking you for the withdrawal. So that's high. And this is again dynamic. And even JapPay you can trade, and they don't have a web platform. You can download an app. And then we have one thing called Coin Mama. This is also a very popular website. Now, the objective of our curriculum right now here is not about learning how to trade Bitcoin, but to understand what are Bitcoins and how the blockchain technology works, what are the government rules and regulations, and what are the limitations. So we will take a break and then we will learn more about the limitations, the problems associated with the blockchain, and risk involved with the blockchain, cryptocurrency trading, and a lot more things. So I'll get back soon. Let's have a break.